Investing business you can learn by reading. Read everything Warren Buffett's ever written, watch every YouTube video he's ever appeared in. That's a great way to learn about investing. But investing is more than just, the way to really understand investing is to understand a business. And one of the most important skills you need as an investor is distinguishing between a great business, a good business, a fair business, and a bad business. And one way to get a sense of the quality of a business is go to work for one. So the recommendation I give to people graduating from business schools these days is this is the greatest time in history to work for a startup. There are lots of incredibly interesting businesses being formed. And if you can be one of the early employees, you're going to learn a lot about how a business works, how to make payroll, how to market your product, how to design something. And those skills I think are invaluable. First of all, you might even find it really interesting. You might have joined the next Facebook, so that's one thing. Even if the business fails, you'll learn a ton from that. I think that's the best experience you can get, ultimately, to be a good fundamental investor. The most successful people in the world, I know very few of them that haven't had a major failure. If you read through they're not the financially most successful people. If you read through the Forbes Billionaire list and you read their stories, they've had failed businesses and they've lost everything and they've hung on they've almost died holding on to the ledge. So there are lots of examples of people who had huge adversity. And I think it's how you deal with adversity that determines your ultimate success, as opposed to how you deal with success that determines your ultimate success. You don't need to make 100% a year to have a fortune. You just need to invest at an attractive return, 10, 15% over a long period of time. Your money grows very significantly. So how do you avoid the riskiest investments? My advice would be to invest in public securities, invest in listed companies, companies that trade on the stock market. Why? Because those businesses tend to be more established. They have to meet certain hurdles before they go public. The stocks are liquid, so you can change your mind if you want to sell. And my approach in business, in my personal life, in a management role, is extreme candor. And I think that if you live that way, you'll run the risk of offending various people over time, but you'll have much better relationships because, if you tell people the truth, first of all, it's not typical. A lot of people, in the interest of politeness or fear of confrontation, or it's just uncomfortable, don't speak the truth. And that goes for people on boards.
Mm-hmm.
There are lots of examples of super talented people sitting around the room as an institution is failing. Think of all the banks during the crisis where people were not willing to confront the CEO. So I'm willing to confront the CEO, but I'm completely candid with him about his successes and his failures. Investing is about, the best investments are the ones where we are confident we're right and everyone else is wrong. If you're arrogant in investing, you're going to get killed, right? If you're not confident, you'll never make an investment, right? So you have to do a sufficient amount of work to be confident enough to have the conviction to do something that's contrarian, right? We bought the stock of a soon-to-be bankrupt a shopping mall company during the financial crisis at pennies per share. You have to be willing to look silly when you do something like that. General Growth stock's up 90-fold since our original investment. We had confidence. Maybe people thought it was arrogant to believe that we could be successful in turning it around. Went to business school to learn how to be a good investor. And I learned the first rule of investing, which is you do your due diligence before you wire in your money. And when I got to HBS, I actually opened the course catalog for the first time, and there wasn't a class on investing. Now, there were classes on accounting, there were classes on finance. So I decided I had to develop my own little self-study program. And I wanted to, so I opened a Fidelity brokerage account. I said I had some money I'd made in the real estate brokerage business. This was my tuition in the investment business. And it was about a year of tuition. And if I lost it, it was as if I had gone to business school for 2 years, but paid for 3. So I figured it was like the inverse of the Oxford 1+1 program. But, the first stock I bought went up. And then I said, okay, I found what I want to do. A few things you can really learn on your own. You can learn investing by reading books, by reading annual reports, by you can have a portfolio and invest $100 and you can learn the business, unlike many other businesses which require a lot more.